Good Friday evening, everyone. Hope you're doing well and you're safe and you're sane and healthy. I know I missed last week's video, and I can't say that I've been overwhelmed in the office, but I've been certainly with a larger to-do list, considering that I got through almost my entire to-do list during the pandemic. So tonight we're going to cover a couple of topics, probably more topics than normal, but I'm going to go through them quicker. So number one, thanks for watching. Number two, if you like what you see, please give it a thumbs up on YouTube. And if you don't know, our blog, investfortomorrow.com, you'll see when you log on to the new website, which I'm still asking people for constructive criticism. So please, if you have any comments on the new website, please let me know. You can look at the blog there. I've been posting a ton of stuff over the last month, less so on Street Smart's newsletter because I've just been able to sit down in half an hour increments to bank some stuff out. So tonight we're going to cover my overall view of the market right now. We'll talk a little bit about gold, a little bit about the dollar, very little about the election, and where this new bull market stands vis-a-vis 2009, the last time a bull market began. So with no further ado, let's talk about first, July is over, so 7 months of 2020 are over. 2020 certainly feels like 7 years already, as most of you would certainly attest. So August begins, and unlike most months, whether August begins and stocks are in an uptrend or a downtrend, August has not been a good month. And combined with September, it's the worst 2-month period of the year. But August in particular does not have a good track record. I think it's roughly unchanged, down a little bit. When you think about it, because stocks go up 3/4 of the time, or go down 1/4 of the time, for something to be even for the month is not an endorsement. So August has been weak. Also, I don't know if it's going to play out this year, but I know the first day of August is the worst first day of any month of the year. So of the 12 first days of the month of the year, the first day of August, which will be on Monday the 3rd, will be, we'll see what happens, but that has been historically the worst first day of the year, of the month, excuse me. Let's go on. So I've written a lot on the blog in the last, where are we, August, July. So 3 weeks or so, I've been probably as negative as I've been in a while. And the reason behind it has been the outperformance of the NASDAQ relative to everything else, relative to the Dow, the S&P, the mids, the smalls. And it's not that the NASDAQ has just outperformed. It's done so to a degree that we haven't seen since the dot-com bubble. Now, I've written this over and over and over again. One, this is not a bubble. Looks nothing like a bubble. A bubble is generational. People use the word bubble like they want a glass of water all the time. Investment bubbles only happen once or twice in your entire investing life, not decade, not month, not year. So in order to get a bubble, it is so difficult. And I don't think this is anything like the dot-com bubble. And I'm happy to argue with you. I love the arguments. I was knee deep in the dot-com bubble. I lost a bunch of clients because I couldn't understand it, and I didn't invest well, at least according to a bunch of people who fired me at that time. So this is not 2000 or 99. Looks nothing like that. I am going to share my screen and show you what I believe will be. Okay, so this middle chart just shows the S&P 500, the spiders, divided by the Qs, or the NASDAQ 100. It's basically the S&P 500, and I was kind. I could have used something even worse like the value line or Wilshire, but it's the S&P divided by the NASDAQ, and you'll see I chose, what did I choose? 5 years, and you can see that the S&P has underperformed. I mean, this is a beautiful chart going straight down. I can flip it around and it's going straight up. This is epic or historic. Pick any time frame you want. So someone out there is going to email me and say, Schatz, you're just cherry picking. Okay, I'm cherry picking. Let's go to 1 year. And it looks disastrous. The S&P is so far underperforming the NASDAQ. Let's go 3 years. Same thing. I told you 5. Let's go 10 years. I don't care. I got nothing better to do on a Friday night. And there's 10 years. So you've got epic outperformance in the NASDAQ 100 against every major index. Let's take a look at this top chart. This is simply the volume of the NASDAQ versus the NYSE. You'll see since the bottom in March, you've got an absolute torrent, a tsunami of volume on the NASDAQ relative to the NYSE. In other words, there is so much excitement in the NASDAQ. People are flooding the NASDAQ. Amazon reported earnings, Apple, Facebook, Google, Netflix, Tesla, go on and on. There's definitely giddiness. There's euphoria. There is greed in the NASDAQ relative to the rest of the market. I said this on Fox Business, and I said it on Yahoo a number of times, and you can find those segments on our website under In the Media, under Insights. This is a warning sign. It doesn't mean anything's going to crash. Everyone's like, well, does that mean it's going to crash? No. It just means that the NASDAQ has gotten very stretched versus the rest of the market. So for my money, the NASDAQ, I really talk about the NASDAQ 100, now has more risk relative to the rest of the market than probably at any time in 20 years. Well, the rest of the market could play catch up and the NASDAQ could go sideways, or the whole market could go down and the NASDAQ just goes down more than the broad market. I don't think we're ready for a big crack in the market. Could we go down 5 to 10%? Sure. In today's market, that's a 3-day move. It's not a big deal. But given where we are in the year and the election, and certainly what the Fed's doing, which is dropping nuclear bomb after nuclear bomb, I don't think right now a big decline is in the cards. Again, 5 to 10%, sure. Anything more, something would have to come out of the blue, and I don't see that happening right now. On top of the NASDAQ volume and on top of the NASDAQ outperforming everything else, you can look in the options market, and you will see some very greedy people in the options market. You got a lot of folks playing for stocks to go higher. Now, we know that 90% of all option buyers lose money, and they are all loaded up on one side. So the odds favor those people getting hurt. Sentiment is not as crazy and not as extreme as it was from December and January, early February. I mentioned that for 3 months, but it's in the short term, it's close. I mean, sentiment's really giddy, especially in Apple and Amazon and Facebook and Microsoft and Google and Tesla, et cetera. Take that for what it's worth. I'd love to see a 5% pullback, and then we can load the boat in maybe the small caps and mid caps or the Dow. I don't want to see the NASDAQ continue to melt up. And even though I own a bunch of that stuff, I don't want to see it, because the worse it gets, the worse the punishment's going to be. So if we can get a pullback into Labor Day or sometime in August of 5 to 10%, then I think you can run higher in the fall. If we continue higher into Labor Day, I'll be much more concerned come the fall. That's a topic for a different video. We'll talk about it another time. So let's see, NASDAQ, we talked about options, talked about the beginning of August. People are giddy. What else do I want to mention? I want to mention along the lines of Apple and Amazon and Facebook and Microsoft, gold and the gold stocks have been exhibiting similar behavior. People are getting giddy and greedy, and the gold commercials are out there, and I see my Twitter feed full of comments on gold and silver and blah, blah, blah. And you look at the financial programs and they're all talking about gold 2000. Well, you know, longtime readers of mine, listeners of mine, clients of mine, I have had a long-standing target of 2,500 in gold. Especially by 2020. we're there. I think I'm going to be conservative. I think gold probably goes 3,000 or more. The timing, I'm not so sure about. I want to see it pull back first. At the same time, gold has gone like this. The US dollar has gone like this. And since they usually, not always, but they usually go in opposite directions, you've got a trade that is like an alligator's jaws. For my money, even though I own a bunch of gold stocks in our sector strategy, I think the trade going forward months is that gold goes down and the dollar goes up. For some, it could only be a 1 week trade or a 2 week trade. It could be a month or 2 months. Hard to tell right now because the dollar hasn't fully bottomed and gold hasn't fully peaked. But that's what I'm thinking about. If I had to put on a trade for that I would want to pair it off, I'd want to be long the dollar and short gold or something to that effect. Put a stop under your gold stocks. I mean, we own Newmont Mining, and I've enjoyed a pretty good run. And we've owned Sprott, which I mentioned on the TD Ameritrade network. So we've owned a bunch of them. Don't get greedy. Don't get stupid. Protect those profits. When gold turns and those gold stocks fall, they will probably fall pretty hard. So just be careful. And finally, I'm going to mention, so as I've been talking about for several months, my phone's ringing at night. That's very bizarre. The market bottom March 23rd. I wrote about it and I said, this is a low forming. I did not say bang, bang, bang. This is the bull market beginning right now. Load up the boat. I didn't. I did say market looks like it's putting in a low right here. I did not see it being the beginning of the new bull market. It is the beginning of the new bull market. And I can describe that to you. I've done in other videos on thrusts we've seen only happen at the beginning of bull markets. This bull market may be a short one, it may be a long one, but the bull market began March 23rd, just like the old bull market began March 6th of 2009. In the blog next week, I'm gonna put the two charts together and show you where they are. As crazy as this run has been from the March 23rd low, it doesn't look a whole lot different than what we saw in the early stages of the bull market beginning in 2009. It feels different now because the NASDAQ has just gone crazy. And if you own Amazon, Apple, Facebook, Microsoft, Tesla, Netflix, you know the deal. It's been insane, epic, historic, all those words that I keep using over and over again. But this is how a new bull market launches. I forgot, someone on Twitter called it a lockout market. I did not. I love the term though, because every time there's a mild pullback or a sharp reversal, everyone gets ready. Everyone sells and then gets ready to buy much lower prices. And those much lower prices don't come. They lock you out and they immediately turn. And that's what's happened. So next week, I think is going to be, I'm not going to say critical or unbelievably important, but it's going to be a key to the short-term direction. If the bulls can get going next week, then they're probably going to take out the July highs. And the NASDAQ should do that early next week. If the bulls cannot get going and the bears make any headway, then perhaps we could see the Dow maybe down 25,000-ish or perhaps even lower than that by Labor Day, which I think would be very healthy and constructive. So that's my update for tonight. I will have hopefully more next week. I am so delinquent in getting out my Q2 client report, which I normally do the first week of July, and I just have not been able to finish it. I've had so much to say. As you know, I'm not known for brevity. So with that, I am going to say thank you for watching. If you like what you saw, please give me a thumbs up on YouTube. Yankee Red Sox series is starting tonight. I think it started an hour ago, so I shall go watch that. If you got questions, comments, concerns, as always, feel free to email me, paul@investfortomorrow.com. And I will stop sharing my screen so you can see my ugly face to begin your weekend or whenever you're watching this. Again, I hope you're safe. I hope you're healthy. And most important, I hope you stay sane. Take care. Bye-bye.